So we've been selling off for over a year now, and we finally got to this phase of consolidation. And now we saw this breakout, but then we got a rejection. So the question is, what's happening next? That is exactly what we're going to be covering in this video. So stay tuned. Let's go ahead and jump right on into it. My name is Xander with Facer Trading Academy. If you guys are new here, welcome. Consider subscribing, liking the video if you enjoy the content, and if you learn something, and share it with a friend. And if you're a returning member or a returning subscriber, welcome back, and let's jump right on into it. So like I said, we've been selling off in this descending channel for over a year now, basically since the beginning of January of last year. And so at this particular moment, what happened is we approached this top channel resistance. We consolidated here, got rejected, pulled down. We didn't pull down all the way to the bottom of this channel right here, which would have been approximately probably around 300, 308. So we never even came down to that point. We did see some selling pressure though, right before Christmas. We sold off right here. Throughout Christmas and New Year's, we were consolidating. And on Friday of last week, and then Monday, which is today, we saw a push to the upside. However, we did end up getting rejected right over here. So let's go ahead and zoom in. That way we can break down what's been happening lately a little closer. So again, consolidation, break above the EMA, which is this blue line right here. And we're looking at the 4-hour chart. And on the daily chart actually, and on the daily chart, we broke above the EMA, pushed up to the 180-day, 200-day SMA, which isn't quite the top of the channel of the trend line. Not quite the top of the resistance of the channel trend line. However, we don't necessarily always come up to the very top. Like right here, we didn't come up all the way up to the top of this channel trend line. Right here, we didn't come up to the top of this resistance channel trend line. A lot of times we do, but we don't necessarily always have to. And so if we're looking at the RSI, the MACD, we're not super overbought, we're not super oversold. The MACD is starting to show signs of a potential uptrend. However, you don't consider just the technicals, or you don't consider just one single indicator. You want to consider a whole array of them, right? You don't want to just look at the MACD and trade off of that. You want to take into account the MACD, the RSI, the average, the moving averages, the EMA, the exponential moving averages, the fundamentals, the economic data that's coming out. And so that's kind of what brings us to what we are expecting to happen in the next couple of days. So if you see these dotted lines, if you go back to a couple of the videos, this is actually what we put up in those videos before it even happened, and it panned out exactly like we said it would. And so at this point, we did mention that on the new year, after the new year starts, we do expect a bit of a rally, which is kind of what we've been seeing. However, I don't expect us to break above this top channel trend line. And so let me break down the reasons why. So at the moment, just looking at the daily chart, let's go ahead and zoom into a 4-hour chart. So we always analyze from the big picture to a smaller picture. So we just took a look at the big picture. Now let's go ahead and look at the smaller picture. So now we're looking at a 4-hour chart. This is the top of the channel that we've been trading in. We didn't quite make it to the top. However, we are fairly close, and it doesn't look like we're going to be hitting it anytime soon. And so today we saw a push up to the upside, and we saw this pattern panning out right here just on the 4-hour chart, which is actually a reversal candlestick pattern. And so that's exactly what we saw halfway through the day. Going into a 15-minute chart, we're going to dive into that a little bit deeper as to kind of what we did throughout today and how we took advantage of these moves. So again, 4-hour chart came down, consolidated. These dotted lines, again, just as we predicted, we came down to this bottom support level, and then we started pushing up. We're probably going to get rejected right up here if we do continue to see a push up to the upside, which is unlikely in my opinion. I believe we did already get rejected, and we got rejected by this 180-day and 200-day simple moving averages. And even on a 4-hour chart, RSI starting to show signs of a downtrend. MACD, we're about to converge, meaning we're about to start going into more selling pressure. And that aligns with the economic data and the fundamentals that are going to be coming out tomorrow, which is Tuesday and Thursday. So tomorrow we have the Fed chair speaking, Jerome Powell, and then he's probably going to be talking about us raising rates again. And as of the moment, we have 25 to 50 on the table. It's most likely going to be 50, just because they have been taking a more aggressive approach to raising rates, and they would rather overkill on the raise than underdo it. So I do expect 50 to be announced. Since 50 was announced last time, that's probably going to be a negative catalyst. If we do see 25, that's probably going to move the markets higher, just because they are slowing down and easing up on the rate hikes and the aggressiveness of that. But I do believe it's going to be 50, which is going to be pretty much the same as it was before. So that should still be a negative catalyst. And then on Thursday, what we have is we have the CPI data coming out. And the last time we had the CPI data come out, it was slightly lower. However, it's not that much significantly lower for us to expect it to be lower this time as well. So as of right now, we do kind of know what to expect with the rate hikes. However, with the CPI data, with the inflation data, it's a little hard to predict. So I would suggest looking into waiting for that data to be released and then reacting versus trying to predict what it's going to be. And that's on Thursday. So back to the chart again, we got rejected by this simple moving average. We had this candlestick reversal pattern pan out, and we are currently at a resistance level or a support level right now for us coming down, and that's at 387. That's generally the range. That's the top of this consolidation pattern that we were in. And if we do break into it, which I'll show you guys the futures /NQ chart. And it does show that we are starting to push below it even after hours. So I do anticipate us to open lower tomorrow, and us to continue pushing down. Most likely the next target is going to be 374, 375, the bottom of this channel that we've been trading in, or possibly even 380, 379, just because we have been finding some support over here lately. So bottom line, I do expect us to move down to at least 378, 379. And then worst case scenario, well, second worst case scenario would be 375. And then after that, if we do continue to see more selling pressure, we're going to move into lower support levels. But as of right now for this week, this is kind of the game plan that I'm expecting. I don't expect us to go higher. Tuesday, tomorrow, we're going to see the Fed speaking, which is probably going to push the markets lower. And then Thursday, inflation data is going to be coming out, and at that point I can't really predict what's going to be happening there. So our plan is to be reactive versus predictive. So we're going to wait for that data to get released and then play the side that it's going to be pushing towards. And so what we trade, if you guys have been watching the channel, is /T, or we're watching /NQ and SPY, and we're trading TQQQ and SQQQ. So today, jumping into a little bit of a smaller time frame, just to break down the exact details. So /NQ, right now we're watching SPY. When we pushed up, we were holding TQs. We got in the morning once we started seeing more buying pressure. We held that up until we started seeing a push through this EMA. And so once we started seeing a break through that EMA, the team was notified that, hey, we're locking in profits and the market's going to continue to sell off. So we said we're locking in profits on TQs and we're entering SQs, which SQs go up when the market goes down. So we got into SQs, and currently the SQs have been pushing up because the market's been selling off. And as you can see in after hours, this is SPY, so you can't really see it as clearly. I'll show you a chart of /NQ where we do continue to see more selling even in after hours. So we jumped into SQs, we're holding SQs, and we're anticipating that tomorrow we're going to see a negative catalyst from the speech that Jerome Powell is going to be making, and we're going to continue to see more selling. So we're just going to hold SQs through that. That's the game plan for tomorrow, for Tuesday. And so that's kind of what we were watching. Again, from a big picture, we got rejected at the 180-day simple moving average. We saw a reversal pattern on the chart from the candlesticks. And then we started seeing a sell-off not only on RSI, but also on the MACD. We haven't seen that cross yet happen on the MACD, but the RSI is showing weakness. MACD is starting to indicate weakness as well. We're shifting from green to purple. And so at that point, what we're going to be seeing is we're going to be seeing more downside. So that's the breakdown kind of the overall market. Let me go ahead and show you guys a chart of the /NQ. /NQ. And so on the 15-minute chart, you guys are going to be able to see more selling pressure going on in after hours. So market close right here, we continue to see more selling, and we anticipate that's going to continue into tomorrow. Into tomorrow morning, people are going to be expecting the Fed to be announcing another rate hike, which is not a positive catalyst for the markets. So that's kind of what's going on with the overall markets. Let's go ahead and go back to the SPY and give you guys a quick recap on the 4-hour chart, give you some levels to watch. So on the levels down, what we're going to be watching is we're going to be watching this 379 level to the downside. That's going to be the first level of support. And then if that breaks, we're going to be going down to 374, 375. And then if that breaks, we're going to be going down to that 353 level, which is a support level from way back when. And that's to the downside. That's kind of if the plan that we are looking at, obviously playing out, if that pans out. On the contrary, if we do see a push to the upside, we're going to see a lot of struggle up to the upside 397, 400 level. Not only is that a critical volume profile level, that's also the top of the channel trend line. And that's also going to be a critical resistance level. So that's going to be the first level to break. And that's obviously going to be a difficult one to break. And then if we do break that, we're going to be looking for 410 to the upside. So that's a quick update for the market for you guys. If you guys do have any questions, if you guys are interested in letting me know what you guys are watching, make sure to drop it in the comments. Let me know. I might break down that stock for you or that chart for you as to what we're watching. And I'll see you guys on next week's Stock Talk video.